Thanks everyone for joining us for our second session of our fire relief fundraiser. We've got 6 great companies that have made a donation to either one of our suggested charities or a charity of their choice supporting fire relief victims. First up, we have Doug Ramshaw, who's president of Minera Alamos. Doug, who did you donate to?
The Red Cross, the Northwest Territories Red Cross. And I'm glad you gave some suggestions because I didn't want to realize I donated to arsonists instead. So I am on the right side of history and happy on behalf of the company to have made a personal donation to support the efforts there.
Well, I really appreciate it. And I appreciate you joining us to give us an update. It's been a while, actually, since I had an update on Minera. So looking forward to that for anyone joining. Just a reminder that this presentation, like all the other presentations, will contain forward-looking statements. If you'd like to know more about those, you can find them on the company's respective presentations on their websites. And there will be a Q&A section. So if you have any questions, feel free to put them in the Q&A box and we'll get to those. So yeah, first up, Minera Alamos, ticker on the venture is MAI and on the OTCQX, MAIFF. Doug, do you want to get started? Give us a little bit of an overview.
Absolutely. And thank you, Deborah, for coming up with this initiative. I think it's very easy as a mining investor to think, oh, woe is me. Look at my portfolio. Look at this sector. It's this, the impacts of what we've seen in the fires in Canada this year and many years, kind of put things in perspective that you might be having a bad day on the gold page. Some people's bad day is going to last decades ahead as they try to rebuild their life. So really appreciate you putting this initiative forward. I'm very happy to be part of it today. As Deb said, I will be making some forward-looking statements today. Minera is a mining operating team. That's a big differentiating factor in this space. Hopefully you're not hearing the dog barking. And we've been focused on Mexico for the last 15 years. We like it down there, despite obviously a lot of noise of late, and which will probably get louder as the run up to the federal election next year. But Mexico has a lot of things going for it. It does actually have a good permitting process that's rapid relative to a lot of jurisdictions. I was talking to a leading gold producer down there at the conferences last week in Colorado, and he says, "Show me." I permitted and built 2 gold mines successfully in the last 10 years, and there are very few jurisdictions of the scale of his operations you could do that. So the other thing which it has, and there's been a lot of discussion about the lack of skilled labor in the mining sector, and that's true. I think it's a genuine cause for concern. Mexico has obviously a storied history as a location of operations going back hundreds of years, and with it a mining culture there. And I think that's actually very important on a go-forward basis. So we built a number of mines down there quite successfully, and we've got our first one up and running. We specialize in low capital intensity projects. That was smart before this period of inflation. I think even smarter now. The next mine we plan to build next year, we could build 5 of them, 5 of those same mines for some companies' capital cost overrun, not just their capital costs. And I think at a time where inflationary pressures are hitting the sector really hard, sometimes timelines can drag, sometimes things can seem to be slower, but ultimately time doesn't have the same dilutive factor as big capex overruns. So I think this is a lean, mean, and smart business model that we're executing on, and using principles that the team had done before in Mexico when they built the El Castillo mine in Castle Gold that started out as a $7 million build, turned into a 120,000 ounce a year gold operation for Argonaut Gold, just coming to the end of its life after 14 years. But that effort, basically done by our team over the first few years, all started with a $7 million capex. And it's kind of that business model we're following again. Ultimately, how everyone has these slides, I think we can realistically, make a push to to build 150,000 ounce a year producer just from our existing asset base. We're always looking for additional assets that make sense for our shareholders, that make sense for our business model. And it's this sequenced build with one project supporting the second one and the first two supporting the third one, which again, hopefully offsets a lot of the the cost risk of just going it alone with a big operation. We can get to a meaningful production levels, sequencing smaller operations that can grow over time, but will be supported in their growth through the cash flow generated from them. And what this could mean, this is probably the most forward-looking slide in the deck, but it's to try to give a realistic look of where we think the profile here can come. We're waiting on a permit amendment at Santana, which I think we are expecting in Q4 this year. That will allow us to kind of get Santana to its initial 25,000 ounce a year production profile. And with the cost structures we have down there, that spits off excellent free cash flow to support our next bigger operation, Cerro de Oro, that we are doing everything in our power down with the permitting agencies to ensure that we have those permits in advance of the federal elections. Often there's a period of time where certain stuff can get signed off and pushed through. And so we're working towards our current permit applications being accepted by sometime in the first half of next year. We'd like it to be earlier rather than later, but it would be nice to be constructing Cerro de Oro, which is about a 6-month build while everything shuts down for the elections. Importantly, we've got a funding package put together. It's been with lawyers for the last 2 years. 2 years. It feels like 2 years. 2 months now, 2.5 months, as we're back and forth on a few business elements of that and the drafting of those. But it passed technical due diligence with our lender back in the end of June. So in my mind, no risk of that not closing. And that was important for me because I can't control the permitting timeline, but what I could do is provide our shareholders with a clear path to how a low capex project like Cerro de Oro, which is sub 30 million US, was going to be funded. So they weren't going to wake up to some hugely dilutive funding package to build it because we hadn't thought about that. No, we're always trying to be forward thinking. And if that gets built next year, it allows us to kind of, I think, put out a pretty enviable forward run rate for 2025 and beyond, of a sub-1,000 AISC production profile and meaningful kind of 85,000 approximately ounces of production moving forward, which gets us pretty close to that magic 100,000 ounce level. But more importantly, I think right now our operations were designed to work in a $1,300 gold environment and take advantage of a $1,800, $1,900 gold environment. These are very healthy gold prices we're seeing right now. We never anticipated the benefits of having these lofty gold prices when we started this business model. It was much more important to ensure that it could work in whatever gold price environment fell upon the sector. And ultimately, La Fortuna will get to the PEA summary. It can get a lot bigger than what was presented in the 2018 PEA, and it's one of the reasons why it's kind of got pushed back behind our open pit heap leaches. Because we really want to, when we build it, we want to make it a bigger version of its current self. But it's another exceptional low capex, great economics operation that happens to be sitting with its permits right now. So we don't have some binary outcome on permitting in Mexico. We have 3 assets. 2 of the 3 have been permitted under both the AMLO and the predecessor government there. Our permitting work is good, and the permitting consultants we use down there that are guiding the process are excellent too. So, I think we have a very good track record of actually getting projects built in Mexico. And I've been giving this presentation talking about low capital intensity builds for a long time, and it suddenly dawned on me I haven't actually had a slide in the deck for a while that actually shows how we fit in that profile. I mean, a typical gold development projects anywhere between $1,600 and $3,000 per ounce of production profile. Cerro de Oro will be 500. Santana, when it gets up to 25,000 ounces a year, will be 300 to 400. La Fortuna, I've actually already accounted for a slight uptick in our capex from the 2018 PEA, and it's still 800. So we compare very favorably. And so, I don't think we'll ever have a surprise for our shareholders on capex. And we have a host of developers that right now probably either have given that surprise, and it's never a pleasant one, or are probably sitting back wondering when they have to drop the hammer in terms of the surprise of cost escalation that's been rampant, obviously, in the industry. Very technical board of directors, mining engineers, metallurgists, mining geologists, and me, a quasi-mining geologist by degree, but I've forgotten more than I was ever taught, and a very experienced operating team. I mentioned Castle Gold earlier. Well, Darren Kernaghan designed and built that El Castillo project. Federico Alvarez, our COO, he ran it, and in fact carried on running it for Argonaut Gold until we stole him back. Janet O'Donnell, our CFO, was the CFO of Castle Gold. And Miguel Cardono, our VPX, was responsible for tripling the El Castillo gold resource in just 2 straight years, from kind of the 300,000-400,000 ounces that it was built on to 1.2 million ounces when Argonaut bought it. Along the way, we've added people, to complement the team. And as the company grows, we'll continue to make smart additions to our team. But we're lean and mostly mean. And I think it's the perfect team to be developing these, with the blend of experience and certainly hard work. It's worth noting, when we were setting about building the Santana mine, we got the funding package, and then COVID hit. Well, we built it, and we built it on budget. It was 6 months behind a pre-COVID schedule, but it was on budget. And Darren Kernaghan, who I think sometimes forgets he actually lives in Toronto, has spent probably 95% of the last 3.5 years down with his team in Mexico doing the really hard yards, relative to someone like me that just gets the privilege of telling the markets what our exceptional team are doing in Mexico. So roughly 130 million market cap. We're debt free. That will change soon as we're taking debt on to build Cerro de Oro. But one of the beauties of these low capex builds at $1,600 gold, Cerro de Oro pays back in a year. So we don't mind taking a little bit of debt on that is modest in size and rapid to pay back. We're largely US generalist owned, high net worth individuals, and then a big swath of retail. Management owns 5 to 6%. Darren and myself, between us, about 4% of the company. And we bought that stock alongside our shareholders and consider ourselves extremely aligned. The kind of alignment that is rare in this sector, but I think it is important, and I'm proud of our alignment with our retail shareholders in this company. Analyst coverage from four houses, and a stock chart that looks very, very similar to many stock charts out there, and that's the biggest challenge for me. Is reversing that. And I think with operations starting to reverse a little at Santana in the future with Cerro de Oro and La Fortuna, we have it in our power to make a material change to that stock price chart, regardless of the nature of the gold tape out there. That's our Santana mine. We had our first blast in 2021. We produced, about 13,000 ounces in a tough 2022, where a 3-year drought was hitting Mexico and Southern California very, very hard. We, towards the end of the year, made a decision to actually slow down mining. No one likes to see that, but it was the right decision. It was prudent. It has allowed us to protect our balance sheet. And now with that drought dissipating, and in advance of the permit amendment, which will allow us to triple pad capacity there, we're starting to scale things up again in the back half of this year. And I hope that we'll be able to present soon a much better forward outlook for 2024 that should give both us and the company side and our shareholders a lot of reason to feel confident about the future. When we were mining in 2022, our costs were very in line with what we were considering pre-COVID. Not only have we not seen a lot of CapEx inflation for our projects, but our op costs are pretty insulated as well. Our direct mining cash costs of just under 1,200 Canadian an ounce, or below 1,000 US in 2022. And as operations scale up, those levels against a rising cost curve in the sector should be able to be held. So the big thing to look out for here at Santana is that permit amendment. That should give a much clearer path to very meaningful gold production and meaningful free cash generation in 2024. And we should be in a business that is all about making cash, not producing ounces for the sake of them that burn holes in the bottom line, but actually developing ounces that make sense and make money. There we go. But the game changer for the company, one we're extremely excited about, is Cerro de Oro in northern Zacatecas, just north of Penasquito and a little further north of Orla's Camino Rojo. Orla, like Minera, one of those companies that have received permits from the AMLO government. And good actors, good teams in Mexico should have nothing to fear about operating in the country. We look forward to developing mines that benefit all layers of stakeholders, including the federal governments down there, and our shareholders on the Minera side of things. We did a PEA about a year ago, was released, and that led to us completing our final surface rights agreements. We have most of them in place even before that PEA, and we finished off some other ones which would allow us to permit, and our permit applications, which are in with the government, don't just take into account the PEA case here. We're permitting for something twice that in size. So the PEA was, the base case PEA was 8 years of just under 60,000 ounces a year for 8 years, life of mine AISC of 897. But we see something here that is more like an 11 to 12 year mine of closer to 90,000 ounces a year. And we're permitting a heap leach pad for twice the capacity of this base case. It's an exceptional low strip operation, and it's one of the reasons we can mine 0.37 of a gram in Mexico, a little over 0.4 in the first 3 or 4 years, is because of a remarkable life of mine strip ratio of 0.3 to 1. That coupled with our cost structure in Mexico, and that allow us to do a tremendous amount with low grade systems. Open pit heap leach is always an earth moving exercise. This one, absolutely. There was very little need to permit much in the way of waste dumps because of that strip ratio. Costs have been informed by Santana. And so we didn't have a single person raise an eyebrow to a sub 30 million US capex to build a 60,000 ounce a year low AISC operation. And those were the numbers in our PEA, and given time is short, all this is in our deck. But again, exceptional economics. I think even at $1,300 or $1,400 gold, this still has a plus 40% after tax IRR. And that's the way you should be looking to build an operation, one that still gives you great returns at lower gold prices. Again, it's a close to 800,000 ounce overall resource. We ultimately think this will be much more like El Castillo, that's 1.5 million ounces plus. Looking forward to getting it permitted, looking forward to getting it built, looking forward to the very generous free cash generation of this project for our shareholders and how we can grow it. This financing package should be closed hopefully next week. The lawyers, I know, on last minute nits in the agreements. Again, it's past technical due diligence. It's a $15 million loan and $10 million royalty package. And for those that don't like royalties, I negotiated a 2% buyback on that 2.75% NSR. So given there's a big upside case here, we didn't want to price an NSR on a base case and give all that upside away. So we have a very nice buyback on that. And then La Fortuna waiting in the wings. This is a 3.5 to 4 gram open pit. It's amongst the highest grade open pits in the world to be developed. It has, again, exceptional economics from a 2018 PEA. We already own the 2,000 ton a day mill. So we're not expecting huge capex changes on this, but it's a 35 or 40 million US capex now. Exceptionally low AISC, sub 500. But one of the reasons, despite it being permitted, we've kind of left it in the background, is this PEA was just based on a 5-year starter pit. And again, no one likes 5-year, mine life. So our goal, because of the exploration potential and that little red star right in the middle of the claims there, is where that 300,000 ounces are. We've got brownfields extensions to that, tremendous greenfields targets that haven't been tested since our team owned this project back in the Castle Gold days. So our sense is we should both increase mine life here, but also look to fully utilize that 2,000 ton a day mill. So whilst it is something we could build now, and it's nice that we've got that as a kind of a backstop on our project sequencing, in reality, we'd rather have this as a 8-year life, maybe 18 or 1,900 tons going through that mill, and turn it on as a much bigger operation. So in terms of what to expect, well, there's a big red bar there for the permit receipt for Cerro de Oro. It's going to be sometime, what we're working towards is sometime in the first half of next year, hopefully earlier than later. These are always best guesstimates, based on the information we're hearing. There'll be infill and expansion drilling and additional metallurgical test work for optimization studies. But if all goes well, we should be building in Q3 of next year and into Q4, and can start up right around the end of 2024. In the meantime, we're looking forward to getting that permit amendment that will allow us to triple the pad capacity at Santana. And we can use the current pad there right now, but it would create for inefficient stacking. So Darren and his team would prefer to wait for that pad amendment before we really push the production rates. And we'll continue as free cash starts building again from that operation to look at the bigger picture at Santana. We'll have a maiden resource out soon, which will be, demonstrate something very similar to kind of how El Castillo started. And we knew how that grew out of exploration from cash flow. That's what we're planning again. One last little thing, I didn't get these slides at the Denver Gold Show because copper, and I just thought, who cares about copper? Well, we do, and we care about it because we have a little hidden copper asset in Minera that doesn't belong in Minera, but we feel like there's something to surface value for our shareholders. This is a project which actually had a PFS done on it in the past. It's small, it's 8 to 10 million tons of about 1% copper equivalent, but there's a 3 to 4 million ton high grade zone of it, which is closer to 2% copper equivalent. Darren has been kind of remodeling the PFS and PEA studies that have been done in the past to kind of look to build a low capital intensity copper producer, because copper capex doesn't have to start with a B. So at some point, we'll bring this value forward for our shareholders. We've been looking at a few things this year. A couple of them fell away, but we just want to add a little bit of a secondary asset alongside this. It will be funded independently of the gold side of the business, and hopefully our shareholders benefit from Minera Copper either as a component of the gold company or as a separate entity in due course. So on that note, giving virtually no time for questions, I'm sorry. I will shut up and listen to Debs.
No, that's great. It was a good update. I do have a few questions for you. So talking about Cerro de Oro, you talked about your US 25 million financing package. That'll get you to what's outlined in the PEA. You mentioned doubling that. Like, how far does that funding take you in terms of the upside potential, or will you have to finance again that asset?
No, basically doubling the resource is going to be very simple. It's existing claims with that we now have the surface rights over. So we've kind of sterilized those claims. There'll be a negotiation on what the party is going to get out of it and what we're going to get out of it. But what we can get out of it is considerable, and it's why we permitted 120 million tons of heap leach pad space, because we're that confident in the resources there. We've already got historical drill data. So we do those land deals. That adds to our resources. And we'll just fund a lot of that out of the cash flow, both of Santana and Cerro in its kind of first iteration.
Okay. And then my other question was, are you looking to add to your portfolio of gold assets? Are you looking at M&A currently? Or you just really?
We always look, and the market craves M&A, and then you're in any company that announces an M&A deal, the market goes, well, not that deal. It's like, so you're always kind of gun shy. I mean, we're looking at things. Obviously, we like stuff in Mexico, and we're happy working down there. So we're looking at tuck-in type deals, which are smart, add to the pipeline, or advance from a permitting standpoint, that we think would complement our existing base. So yeah, we're always looking, and we were looking when we had two assets. I had this we got asset number 3. We didn't have a name to it, and it was Cerro. We've always talked about an asset number 4. Doesn't necessarily have a specific name on it, but it's for me, it's showing the intent that we want to grow beyond this space, but we'll do that smartly and in a shareholder-friendly way.
And you intend to stay in Mexico as a focus?
I mean, building the foundation of the company, it makes sense there. I think just like you want to be a multi-asset producer, you want to be multi-jurisdiction in good time, in due course. But the cost structure in Mexico is the perfect place to build the at least the foundation of the cash flow that can support activities elsewhere.
And it seems that the Mexican government's been making changes to its mining policy recently. How does this impact you? Does it benefit you, or do you have any concern around this?
No, I mean, those mining reforms have all been under huge legal challenges in Mexico right now, just because of the unconstitutional nature of them. In fact, in some parts of Mexico, companies have had the state government overturn the impact of those. There was a lot in that mining reform. There should be in any country's mining reform, and so we're not overly troubled by them. I think it's just hard for investors to wrap their heads around it. I think in the past, the biggest challenge for people to get their heads around in Mexico was, what about the cartels? And the cartels are still down there, but in many ways, the political landscape has been so loud that no one's even asked me about cartels in the last 2 years. And I think that's, hopefully with the federal elections next year, even if Mr. AMLO's party stays in power, we'll have a slight moderating of the kind of language, but sometimes populist, bombastic language that comes out of the government, which I think doesn't help investors have a clear picture of what's actually going on there. What we're seeing on the ground has at times become harder over the last few years, but the wheels of industry, the wheels of economy are actually moving, but it's sometimes very hard for investors to rationalize that.
Great. Well, I don't want to leave on a discussion of Mexico. So maybe you could wrap up by just highlighting some of the catalysts that investors can expect to see over the next 6 to 12 months.
Absolutely. So we got a resource coming, the maiden first iteration resource coming out for Santana, should drop this month. The funding package on Cerro that should again drop in September, which is fast approaching. Should be looking for the PAD amendment, permit amendment at Santana that will give a much clearer path for production there. And then Cerro, hopefully this time next year, Deb, I'm sharing pictures and talking about our team building the Cerro mine, because I think the troubling times in the sector the last couple of years for us can be very much in the rearview mirror as we exit 2024. So I think we've got a busy year ahead of us and should reward the patience of our shareholders.
That's great. Well, thanks for the update, Doug. Happy birthday. Sorry I wasn't able to ruin this one for you, but maybe next year. Or maybe I did with the presentation.
Happy to do it. I'm going to go and spend a bit of family time this afternoon. Thanks, Debs, for having me on.
Great. Well, yeah, thanks for participating and for your support. And I'm sure I'll see you again soon.
Okay. All the best. Thank you.